Look, let's get into it. It's Friday, and who better to talk us through the week that was in trading than Peter McGuire from XM. He joins us here in the Rangaroo studio. Pete, welcome back.
Good morning, or good afternoon, I should say, David.
It is good morning in Europe, but
Yes.
it's good morning somewhere. But look,
Yes.
let's go and look, it's pretty hectic trying to keep up with time zones at the moment. Overnight, the big news was that US CPI print.
You bet.
Headline, 5% year on year. Core, 3.8%.
Yeah.
Hottest since 1992.
Yeah.
The bond market reaction, though, was very revealing. What do you make of that, how the markets responded to it?
Well, if I look at what the close was like, Nasdaq was really strongly bid up. Dow was up, S&P up. Oil came off a little bit. Gold had an edge up higher. I think they were all expecting that sort of number, but where we move forward from here, that inflation story is going to, I think, impact us in that fourth quarter.
No one really knows whether it's going to be transitory or not at this stage. I don't even think the Fed really knows what's going to happen.
I don't think so either.
So where does it leave policy? Because we know that the Fed policy in particular has been very influential on asset prices and particularly market movements recently. So what happens next?
What happens next, David? There's got to be a point in time, as you know, that the taper talks and everyone starts to get down that avenue, that they start pulling the chips off the table. How soon is the state's going to embrace that? I'd say again, Yellen's saying we're going to see rates increase. I don't know when, but maybe towards the end of the year we start to see some movement there. And 22, I think, is going to be a fairly interesting year from an inflation standpoint and start of rising bonds.
So we have the Federal Reserve meeting next week. We get a full gambit of forecasts, including the dot plot that everyone will be focused on.
Well, we've got tomorrow, don't forget. We've got today and tomorrow in Cornwall, G7. And that's
G7
where
as
I'm
well.
sitting here going from a trading perspective. Where is Monday going to play?
All right. So we've got...
That's got to be an inflation point. They talk that all the time.
So we have a G7 meeting over a weekend. Markets are shut unless you're talking about the crypto markets. So where does that leave the event risk? Where can we go and see a big move come Monday morning?
US dollar index, gold, what happens to those markets? I think very, very interesting. If you're going to see something dramatic come out of G7 or talk, or we're not sure really what the themes are going to be, but it's got to be inflation. There's got to be certain talk regarding when do we start pulling the taper and what's happening to that stimulus that not everyone's going to be on the same page at the same time. So we've got countries like Italy are in a different position than what we are in the States, say.
Geopolitics come into it at all? Because there's got to be a lot of discussion about what's going on in China in particular, and I know the relations with the rest of the world. That's surely going to be a feature.
Has to be. And then you hear something like Fauci and what's going on there. You saw the Murdoch press earlier in the week. So all of those factors, and that noise that I hear that's always rumbling along is the uncertainty factor, and that creates, from a risk side, what markets do you want to be a part of? And that can quickly gallop up if the noise really gains some traction as far as the Wuhan lab and what happens as far as Fauci.
Let's go and talk currencies. You mentioned the dollar index, such a key piece of the puzzle when it comes to asset valuations and market movements more broadly. A lot of people are looking at it right now. It's at an interesting juncture. It's recently gone and fallen to fresh multi-month lows. A lot of people are saying, well, at the moment, I know the downside pressure is still there, but others are not too certain. Where do you stand when it comes to the big dollar?
It's about 89.9 at the moment. I think there's capacity to probably, come down to that 89 lower, maybe even into the 88s. Again, very much on the stimulus side. So the states are the largest in the sense of stimulus. If they don't move so quickly and they just start to pull things back and we don't see a rate rise, then I'm sure that dollar will come under further selling pressure.
What about the euro? The euro is another interesting one.
It's been incredible, hasn't it?
We saw the ECB overnight. No real surprise, I don't think, when it came to policy settings. No. But no, just in the background as well, politics, Brexit. I thought Brexit was all over and done with, but
certainly not.
There's renewed negotiations taking place. Run us through that.
Well, the issue is between Brexit and EU. So there's UK and EU. So the talk as far as what's happening with Northern Ireland, and there's issues there that have got to play out. So the uncertainty at the moment is what impact it's going to have to the British economy, and there could be a little bit of further softness going back into, say, again, the fourth quarter. I think there's a feel good at the moment. The vaccinations are very high in UK, and the doors are starting to open from a tourism perspective as far as internal tourism. Summer's in London, so it's starting to bubble away. I was speaking to some friends earlier in the week, and there's a general fairly good mood across the UK at the moment. So let's hope that they can enjoy summer and get to I think a good scene moving forward.
Yeah, he's hoping so. They probably deserve it after the
they do.
Just on the UK, we've seen the vaccine rollout's done very well comparatively compared to other parts of the world. Reopening, there's lots of optimism coming through there. When you look at cable and you see where it sits at the moment, yes, it's had a good run, but is there more upside to come?
I think there's probably another 1 or 2%. You know, you might hit a 143. It's really interesting to see where it is also against the yen. It's been strongly bid up there. So I think that the capacity, you know, against the US dollar, but don't forget, and always remember, if you're a trader, look at the cross rates and look at where it is against euro, where it is against something like the yen or the Aussie and so on.
Let's talk equities, because it's the relentless rally that will not stop.
It's a party, David.
It's a party. Everyone's got a ticket at the moment, and everyone is on board. So
and the retail traders as well. It was an RSVP, and everyone got an invitation, and everyone said, "Yeah, we want to be a part of it."
So how does this go and play out? Because for the time being, you look at what's going on. Bond yields have come off again, so you're seeing the growth areas of equity markets start to go and rally again. The cyclicals really haven't had any profit taking, so it's all this relentless grind higher. What breaks the nexus?
It's got to be stimulus, and it's got to be when do they pull that off, in the sense if it's later in the year and they say, well, no more, and we start to wave it back, bond yields start to increase, then I'm sure that that's going to take some heat out of the market. You've got the S&P running at about a 21.2 times earnings. We understand low interest rates, and it's a different environment versus what it was 50 years ago with IT and so on, that these companies are able to participate and get into markets that would have taken huge marketing plans they just do with a press of a button off a computer.
Yeah. What about, so you talk about this involvement of central banks and liquidity out there at the moment, and that's got to be the catalyst that goes and sparks this volatility.
Yep.
So you expect that we'll start to see some vol pick up? Because one thing that's really been strong at the moment is that, given like no outside of GameStop and other parts of that and the meme stock rallies and everything else, there's been very, very little movement. Rates have been very timid the last few months.
Yep.
FX volatility has fallen to multi-year lows.
Yeah, very minimal.
In this environment where you've got central banks that are starting to diverge when it comes to those policy settings, do you expect that we'll start to go and see more of that volatility and potentially more opportunities?
You'll probably come back to the market, and you know, when you're thinking where that US dollar was, David, it's been, you know, that 91 to say 89 handle. We had it up to about a 93 when Biden was at the start of the year in January in the inauguration. So all of those factors have played out, but we've seen a continuation, that US dollar coming off. Gold's been a great trade over the last, say, month and a half. One-way traffic now back above, I think it's about 1902 at the moment, I'm having a look. So it was sold off to 1860, but you know, that stronger move to the upside now. Commodities have really taken a bit of a hit. If you're looking at copper, and a number of those base metals were spanked down.
Yeah.
Iron ore as well over the last couple of weeks from that high that we saw in Singapore, I think at 225 a metric tonne. So a bit of heat has come out of the market, but the other side, of course, is there are other markets to trade. And so I think keep an eye on gold over the next, say, 36 to, well, longer than, say, 60 hours.
We're sitting bang on 1900 at the moment.
Yep.
When it comes to the outlook, you know, a lot of people look to that previous high that we saw last year above 2000. Is that doable?
I think so. I'm worried about what happens as far as the G7. So if there's some rumblings there that really create a sense of uncertainty that comes out of those talks, then that could really give gold a bit of a kick along.
So it could be a very interesting start to trade Monday morning. Of course, we've got a public holiday here in Australia.
Exactly.
So those who are in the market know you could get some vol coming your way. Pete McGuire from XM, it's always fantastic to chat. Thanks for joining us on the program.
Thank you, David.